How do you get an SBA loan? Well, today's training, we're going to talk about just that. We're actually going to talk about 10 different ways you can get funding with SBA, many of which you might not even know about, and a lot of which you might not even think you can qualify for, but we're going to talk about how you can actually get approved. So by the end of this training, you're going to know 10 different ways to get funding with SBA, and you're going to know how to get approved even when you think you might not qualify. So let's dive in and get going. So what does the SBA do? Well, the SBA is basically a government agency with one real mission: to fund small businesses and otherwise help them succeed. So while supporting the overall economy of the United States, this independent agency was actually created in 1953 to aid, counsel, assist, and protect the interest of small business concerns, to preserve free, competitive enterprise, and to maintain and strengthen the overall economy of our nation. That is the mission of SBA. So lenders and loan programs have unique eligibility requirements for SBA. In general, to get approved, it's based on what a business does to actually receive your revenue or income, the character of its ownership, and basically where the business operates. So even those with bad credit may qualify for startup funding with SBA. We're going to talk about that today. A lot of people think that you really need to have very good personal credit with SBA. Some of the programs you do. Some of them, even with challenge credit, you can get approved. Even as a startup, you can get approved. We're going to talk about those options today as well. So normally businesses must meet size standards with them, be able to repay the debt, have a sound business purpose, and the lender then will provide you with the full list of eligibility requirements for your loan. And there's a reason for this, because remember, when you're qualifying for an SBA loan, you're qualifying two places. First, you're qualifying with SBA per SBA's guidelines. You're also qualifying with the bank that's issuing an SBA loan. Remember, SBA typically is the one that lends money. They are in some cases. We'll talk about that today as well. But they are the ones that actually guarantee the loan that banks offer. So with SBA, you're going to have to meet the lender's requirements. That's the ones that's actually offering the loan. And SBA's requirements, the one that's actually guaranteeing the loan. So that's why the lender's going to provide the unique qualifications beyond what I just kind of went over today as some of the generals that SBA looks for, because they're the one ultimately issuing the loan and basically giving you the loan or approving the loan in its entirety. So Watch Out Media says, hey, good morning from Vegas. Thanks for tuning in. Q Elizabeth Shaw named a bunch of people. That's awesome. She tagged a bunch of people in this, and I appreciate you doing this. And I appreciate Brittany coming in. She's sharing it with people as well. Is it possible for these loans to turn into grants? We're going to talk about that today. Typically not. There is a program where that is the case, and we'll talk about that as we dive in. So if you're getting value from this, hit that like button and subscribe button on YouTube, then click the bell or ring the bell so then you can actually get notified when we go live. So general eligibility for SBA also includes being a for-profit business. The business must be officially registered and operating legally. You've got to be doing business in the United States. So you've got to be physically located and operating in the United States. I get this question a lot. Can I get an SBA loan if I live outside of the country? If the business operates outside of the country, if it's still founded here? What if the business is here and does business outside of the country? So it answers that question. Having vested equity, the owner must have invested their own time or money in the business and exhausted other funding options. The business must not be able to get funds from any other financial lender is their actual eligibility requirement. But in most cases, you're able to get money from fintech lenders, but not at the same terms that you're able to get with SBA, which is why you're applying with SBA. So let's talk about coronavirus funding through SBA, because actually this was just asked by Q Elizabeth, and this actually comes in and brings up a great point with grants versus loans. So this information doesn't change depending on what Congress passes and is signed into law. Many of these options have their own eligibility requirements, right? We've seen that with PPP. We've seen that with EIDL through coronavirus. These are new programs that didn't even exist before 2020, but now they're definitely worth mentioning. So let's talk a little bit about the EIDL. So an EIDL provides economic relief to small businesses that basically experience a temporary loss of revenue during the COVID-19 crisis. Now, small business owners and nonprofit organizations in the United States, Washington, D.C., and all territories are eligible to apply. At first, we weren't. PPP and EIDL, states had to go through a process to get approved. Now that process is done for all states, so everybody can get approved no matter what state you're in. Now, EIDL proceeds can be used to cover a wide array of normal operating costs, continuation of healthcare benefits, rents, utilities, fixed debt payments. PPP had very specific purposes of the loans. Matter of fact, if you wanted to have a PPP loan forgiven, which was the Paycheck Protection Program, you had to prove that you were using the money for primarily the retention of employees. But EIDL is different. It's more of a general working capital type of program where their expectation is that you're using funds from EIDL to actually be able to pay normal things that you might not have been able to pay because your income was impacted by COVID-19. So agricultural businesses with 500 or fewer employees are now eligible. They weren't originally. The 500 or fewer employees is a general requirement for almost all type of business, unless a larger business is still considered small under SBA's guidelines. Doesn't happen very often. Want to throw that in there because SBA considers small business to be that same thing with 500 or fewer employees. And principals with 50% or more of ownership interest must be up to date on child support payments to get approved. And the business cannot derive more than 1/3 of its gross income from legal gambling activity. So some specific qualifications for EIDL, but not for other kind of funding. So remember, EIDL is still around. PPP is out of money. It ran out of money in August. Okay, but EIDL is still around. Now, it originally was loans up to $2 million. Now you're able to get loans typically with EIDL for about $150,000. And somebody was asking, Q Elizabeth was asking about grants. The grant program did exist under EIDL, but is currently not there because it ran out of funding. So basically, they had a certain amount of funding. They funded grants. The first, you could get up to $10,000, or basically $1,000 per employee that you have in the company, up to 10 grand. That money was all forgiven. It was done as a grant. It was done as a gift. So that no longer exists. As a matter of fact, there are grants out there, but really not through SBA and not through COVID-19 because the funding no longer exists for those. So even though there were grants with EIDL, there aren't any longer, but you can still get loans up to $150,000 with this program with EIDL. And Chile says, good afternoon. Thanks for coming in again. I appreciate that. Mr. Seymour says, I'm a new startup with poor personal credit. Who's going to give me a loan? We'll talk about that, but you also want to consider business credit. Business credit is one of the easiest way, Mr. Seymour, to be able to get the money you need because you could build a corporate credit profile for your EIN that's not linked to your social, get all kinds of very high limit credit cards without a personal guarantee and without a personal credit check. And Dane says, it's been a minute. I'm glad I'm finally catching a great live. I appreciate that, Dane. Thanks for coming in. You're going to leave a lot of actionable information today. So let's talk about SBA Express bridge loans. So these are basically exactly what they sound like. You can access up to $25,000 quickly. And by I mean quickly, you're typically able to get an underwriting approval in 72 hours, which is unheard of with SBA because usually this process takes many months to get a loan done with them. And they are also bridge loans. So we talked a lot about bridge loans on our other trainings over the last few weeks. Bridge loans are, by definition, they bridge the gap between your funding needs. So going through an SBA process to get a regular loan could take some time, like a 7A loan, which we'll talk about today. SBA Express bridge loans are express approvals within 72 hours, so you can get the money fairly quickly. And then they also bridge the gap between when you actually can get larger loan amount SBA funding with better terms as well. So let's also not forget about debt relief. It's worth mentioning this. We talked a little bit about SBA last week as well. With SBA debt relief, you're actually able to get up to 6 months of your payments on an outstanding loan forgiven. So if you got a loan before 9/27 of 2020, and again, before, and it's not EIDL, it's not PPP, but if you got an SBA loan of any type outside of EIDL and PPP before 9/27, then you can actually have 6 months of that payment waived. Very simple process to go right through SBA. So when COVID hit, for example, we have an outstanding SBA loan. We use this to go to SBA, and they very quickly basically waived those payments. Now, interest still accrues, but we didn't have to actually pay monthly payments for 6 months, which helped us navigate COVID-19. If you haven't done this and you have an outstanding SBA loan before that date, you really should consider doing this. Now, SBA will automatically provide this relief as follows for loans not on deferment. SBA will start making payments when the next payment due on that loan. They will make 6 monthly payments on your behalf. For loans currently on deferment, SBA will start making payments with the next payment due after that deferment period ends. And in this case, they will also make 6 monthly payments. And for loans made after March 27th of 2020 and fully dispersed before 9/27/20, then SBA will start making payments with the first payment due on the loan. Regardless, this is just some specifics depending on what kind of SBA loan you have, but they will defer 6 months payments. So basically, you don't have to pay payments for 6 months, but again, you are still going to pay interest on that. And Q Elizabeth says, I've been watching your YouTube videos for years. I appreciate that. Thank you. You're always dropping gems. My credit repair, Your Majesty Financial has benefited so much for your information. I love that. See that? She dropped her company's name in here. It's pretty smart. So thanks for tuning in. You guys can see if you're listening and watching on our channels, Facebook, on YouTube, on Periscope, on LinkedIn, on Credit Suite's channels, which you can get to at the top right of our page, creditsuite.com. You can engage just like this as well. Okay, so SBA lenders have been instructed to not collect loan payments from borrowers. If a borrower's payment was collected after March 27th, 2020, then the lenders are told from the borrower that they have the option of having the loan payment returned by the lender or basically applying to the loan payment to further reduce the loan balance after SBA's payment. So a couple of options there if the payment was collected after that March 27th date. So This is for current SBA service disaster home and business loans. And if your disaster loan was in a regular servicing status on March 1st, then SBA is providing automatic deferments through 12/31, which is coming up. That's about a month and a half away. But automatic deferral has some specifics. Interest continues to accrue on the loan, as we talked about. 1201 monthly payment notices will continue to be mailed out. Okay, and they will show the loan is deferred and no payment is due, and the deferment will not cancel any established, basically pre-authorized debit. So what happens here is if you had an automatic withdrawal, you have to stop it. If you don't stop the automatic withdrawal, it will continue. So keep in mind, even if you're getting your payments deferred with this program, if you have automated withdrawal where they pull the money directly out of your account, you have to stop that. If you don't stop it, they're going to continue to draw that money from the account. Now, borrowers preferring to continue making regular payments during the deferment period may continue to do so during the deferment period. The SBA will also apply those payments normally as if there was no deferment. And after this automatic deferment period, borrowers must resume making regular principal and interest payments. So borrowers that canceled recurring payments will not need to reestablish the recurring payment. Let's not forget that, right? So a lot of people like me, like I set everything up on automatic recurring that I can because I don't have to think about it. So you've set up your SBA loan payments on auto pay. Now you need to cancel auto pay for the deferment for 6 months. You have to remember to restart the auto pay or you're going to go late on that loan, and you do not want to go late on an SBA loan because defaulting on an SBA loan prohibits you from being able to get SBA loans in the future. So let's talk about Lender Match. Now, SBA has a Lender Match program where they can actually connect you with SBA approved CDFIs and small lenders. CDFIs are basically community development financial institutions, and the private financial institutions 100% dedicated to delivering responsible, affordable lending. And this is to help low income, low wealth, and other disadvantaged people in communities. Bottom line is a lot of people offer SBA loans, especially now. Okay, a lot of fintech lenders got approval for SBA loans going through COVID-19 relief programs. So as a result, there might be too many options. You might not even know who to go through. And if you want to do that, if you want to know who to go through, their Lending Match tool will help with that. Now, we actually created a page during PPP at creditsuite.com/PPP. You can't get PPP loan anymore. But on the bottom of that page, I'm pretty sure you can still access a link with SBA's top 100 lenders. So that's a way you can get to their 100 lenders, not their list of thousands. But if you go through their lender matching tool, you're able to basically access their list of all of the lenders that they can actually help you secure a loan. So Lender Match is only for SBA guaranteed loans. Do not use it for EIDL loans. And the reason for that is you apply direct for EIDL loans. Actually, the link goes direct to the Treasury for EIDL loans. And then you can get matched with a lender within 2 days or less. And this can help save you time. Look, if you need help with this, you can also give us a call. Our number's right here, 877-600-2487. Or you can go to creditsuite.com/get funding, and we'll put you in touch with SBA brokers, SBA sources that can help. So you have three options. You can go to the link, creditsuite.com/PPP. PPP loans aren't there anymore. That was an information page created to educate people as soon as PPP rolled out. But there is a list there of top 100 SBA lenders. You're also able to give us a call, send us an email. We'll get you in touch with a lender, or just go directly through SBA's Lender Match program, and they can match you with a lender that can help as well. So let's not forget that outside of all these COVID relief SBA programs, PPP and IDL, there are plenty of other loans available from SBA that we might forget about. 504 if you want to purchase real estate, 7As if you actually want to just have a working capital general purpose loan, or microloans, which are more forgiving of credit and you can actually get as a newer business. So we actually had somebody earlier today, Mr. Seymour said, hey, look, I've got challenge credit and I'm starting a business. It's kind of tough. So in this case, microloans might be the answer there, whereas 7A and 504 are more established businesses. So when we talk about 7A loans, this is SBA's main program for providing financial assistance to small business. It's like their general working capital loan. And by working capital, I mean you can use it for like general purposes that you need a business loan for. So they terms and conditions like the guarantee percentage and loan amount may vary by loan or type. Because, for example, if you are a veteran, then you're able to get lower fees on SBA loans than you are if you are non-veteran. So the fees really will vary, and they'll vary based on lender you go through as well. So a standard loan can go up to $5 million. Okay, the maximum SBA guarantees 85% of loans up to 150 grand and 75% for loans greater than 150 grand. What that means is again, don't forget, SBA is not a lender. They don't lend money. What they do is they rely on banks like Bank of America, Chase, Citi, and those banks lend you the money. SBA guarantees the loan in case of default. So let's just look at this just to see how this works. So let's say that Chase gives you a loan for $200,000. Well, in that case, SBA says to them, hey, look, if they meet our guidelines, then we will basically, since it's over 150 grand, we'll guarantee 75% if they ever default. Now you're paying on that $200,000 loan and COVID hits and you can't make payments beyond the 6 months and you default on the loan. Well, in that case, the SBA would give Chase 75% of that 200 grand, which is 150,000 of that 200 grand. Now you see why these big banks can even lend money to small businesses. Lending to small businesses is inherently very risky because the failure rate of businesses is very high, let's be honest. So the result of that is that a lot of big banks weren't lending to banks or weren't lending to small businesses before SBA came in and really got in the space of guaranteeing loans. So now think about it. Chase gives you $200,000 and you default. Bank of America or Chase gives you 200 grand, you default. SBA pays Chase 150 of the 200. So the risk to Chase is so minimal that Chase is now able to lend you that money, whereas they typically wouldn't without this SBA guarantee. That is what SBA does, is they do a lot of things, but they come in and they guarantee these loans to make it easier to be able to get approved from banks, which you typically wouldn't. Now, lenders are not required to take collateral for loans up to 25 grand. For loans over 350, the SBA requires that the lender collateralize the loan to the maximum possible up to the loan amount. And if business fixed assets are not fully secure the loan, the lender may include trading assets. This is done by using 10% of current book value for the calculation. Plus, the lender may take equity in the personal real estate or your residential home. So let's talk about this. SBA typically wants to get collateral equal to whatever the loan amount is. So let's use Credit Suite as an example. When we got our SBA loan, because there's a lot of lessons in this story. So when we got our SBA loan, they came in and we said, we have account receivables. We have this asset where our customers pay us on terms and we have like $1 million of account receivables. We're getting a loan for 350 grand. The assets that we have is considerably more than the loan itself. They're comfortable then as that loan being collateralized with our AR to be able to give us the loan. But here's what's interesting. They came back with the approval and they wanted to collateralize my home anyways, which made no sense. Now, come to find out, they had actually accessed my LexisNexis credit report. If you don't know about LexisNexis, here's why you need to. And they found judgments on LexisNexis, and those judgments made them scared. So they came back and said, we want to collateralize your home as a result. Now, I tell you the story because the judgments weren't true. They were inaccurate. I never had those judgments. And proving a negative is pretty hard to do. But I went to the county courthouse. I worked with them. I got all the documentation I could. I worked with the lender. I proved my case that I didn't have any judgments. And they removed the stipulation of collateralizing my home. So like I said, a lot of important lessons there. Assets in your business like account receivables, inventory, equipment, commercial real estate can be used to collateralize the loan. If that's not enough in value to cover the loan amount, they're going to dip into your personal. They're going to want to take stocks as collateral. They're going to want to use your personal home as your collateral. So you really need to collateralize these loans at the loans over 350. You really need to collateralize these loans, have the assets as collateral equivalent to loan amount to be able to get approved. The second lesson there is you need to get LexisNexis. I can tell you about more problems that I had with the SBA loan from information they got from LexisNexis. So you need to get LexisNexis because a lot of things will come back to haunt you or things you don't even know about on your LexisNexis credit report that will come up in an SBA loan approval process, just so you know. Okay, and Elizabeth says, Ty, me and a group of women with financial companies are collectively building our business credit. That's awesome. Congratulations. A plan to purchase property to flip. What's a good plan for us? Well, that's too difficult of a question to answer here, but we do have a great guide at creditsuite.com/you're on Facebook, creditsuite.com/Facebook that'll give you the step-by-step process to be able to build your business credit. And give us a call too. You'll see our number on these slides. We'll do a free consultation. We'll help you pull your business credit for free. We'll talk to you about tips and tactics to build your business credit. And we'll do a fundability assessment to see how fundable your business is. And then with that, we can give you more specific one-on-one guidance of the best way for you to accomplish your actual goals of building business credit. So let's talk about SBA CAPlines. This is basically their umbrella program where they house like all their specific credit lines. So they have these specific credit lines: seasonal, contract, builders, and also working. And with these 4 cap lines, those are under an umbrella program that is called capline. So if you want a credit line from SBA, you're getting a cap line. What kind of cap line you're getting depends on your purpose of the actual money. We'll talk a little bit about that right now. So with seasonal cap lines, basically the borrowers must use the loan proceeds solely to finance the seasonal increases of account receivables and inventory, or in some cases associated increased labor costs. Bottom line is, if you're a seasonal business, your revenue dips a certain time of the year, This cap line is specifically for the purpose of you actually coming in and using it for that dip in revenue, that dip in income. Okay, it can be revolving or non-revolving. What I mean by that is it can be a loan or a credit line. So even though these are cap lines and credit lines, if you elected to get a loan versus a cap line or a credit line, you can actually do so under the cap line program. So with the contract cap lines program, the line finances the direct labor and material costs associated with performing assignable contracts. Okay, so if you have contracts, especially like if you're in not construction, but if you're kind of in the contracting industry or world because you're a contractor, this can help. And again, it can be revolving or non-revolving. With the builder's cap line, the line can finance direct labor and material costs for small general contractors or building, constructing, or renovation, commercial or residential building. Think about this for a second. If somebody's building a neighborhood and homes, okay, same thing applies with buildings. They have to have all these general contractors and come in and do all the work and build the home. And then they don't get paid, the builder, until they sell the house when it's done. Well, all those general contractors don't want to wait months or years to get paid. So this cap line is for builders to be able to pay those contractors that do the work, knowing that they're not going to get the money from the home until the home is done and sold. There's that huge gap in between. And this is what makes building residential homes and commercial properties possible. If it wasn't for builder cap lines with SBA, you'd have a really hard time getting a house because, again, the problem is in a lot of cases, they actually might not get paid until that home closes. Now, the alternative there, not to get too far down that road, are construction to perm loans, or what are called construction to perm loans, which construction to perm loans are basically where you get a construction loan and you give the builder money in phases as the home is being built. But that's not the way a lot of them do it. Nowadays, you have neighborhoods, entire neighborhoods built, and it's in large part because of the cap line availability program. So the building project serves as collateral, and again, these are available in loans and I'd say crap lines, loans and credit lines you could choose. So with the working capital cap lines program, it's an asset-based revolving line of credit for businesses unable to meet credit standards associated with long-term credit. So if you're getting long-term credit, you need help paying that, then that's what that working capital or working cap lines program actually is. So the working cap lines program provides financial or financing for cyclical growth, recurring and or short-term needs. Repayment comes from converting short-term assets into cash, which is paid to the lender, and businesses continually draw from this line of credit based on existing assets and repay as their cash cycle dictates. And the line generally is used by businesses that provide credit to other businesses. So think about that. If you're providing credit to other businesses, it gives you the ability through this program to be able to do so and still get money that you need, even though those people are paying you back in time. So that gives you the ability to basically fund a lot of other businesses. So some things to think about. Robert says, what are the requirements for SBA microloans? What is the maximum you can borrow? We're going to talk about microloans in a minute here, and we'll dive into that. And Ivan says, I have a 585 score. We'll talk about that. Microloan still may work for you as well. And another Facebook user says, I got approved for, but was what I got approved for, but it was the start of COVID. Is it true you can get multiple SBA loans? I have a repayment plan after the 12 months and 3% for about $25K. Yes, you can get multiple of these programs. You can qualify for multiple with SBA. You can get multiple loans. So we have a loan right now with SBA we're paying back. If we wanted to get another loan and we qualify, we can get another one with SBA, and you could do the same thing. And Jess says, this gentleman is an amazing servant leader helping the business community. Thank you very much, Jess. I appreciate that. And Watch Out Media says, wow, it's like SBA government and making funding easier for people who invest in properties. It is. And, you know, this is why SBA is such a great organization. We oftentimes associate SBA with SBA loans, but SBA does a lot of stuff, guys. They have all kinds of programs that can help you as an entrepreneur, and they do a lot of cool things like this that make things we take for granted every day, like building homes or building commercial properties, or people that give us credit on terms. We take for granted that SBA is a large part of making all that happen. That helps us have the things that we want to have, like homes and building commercial buildings, as well as, even being able to get what we need and giving credit that we need to run our businesses. So SBA program is under, Express is under 7A. Loans up to $350,000. The max loan guarantee from SBA is 50%. Lenders are not required to take collateral for loans up to 25 grand. They may use their existing collateral for for 25 grand up to 350,000. So they guarantee much less, but these are very fast programs for very well qualified borrowers. That's how SBA Express works. It's easier to get approved and faster because you're really well qualified. You're very well established. You've got longevity in your business, your personal credit, your business credit, your bank credit, everything is solid. You have collateral. It's an easier loan to get done, Banks feel like they're taking less risk. They're fine with SBA guaranteeing a smaller amount, and they're fine issuing the loan fairly quickly as a result. Now, 504 loans are also called the Certified Development Company Loan Program. Now I like them. Now I know why we're called 504. What much easier to say. CDCs are nonprofit corporations promoting economic development within their communities via 504 loans. The SBA authorizes them to provide financing to small businesses with help with third-party lenders, often banks. Loans generally capped at $5 million, and certain eligibility, energy efficient, or manufacturing processes may qualify for more than one 504 loan, up to $5.5 million a piece. So low down payment, often 10%, conserves your working capital, 10, 20, or 25-year terms, used for long-term fixed assets for expansion, for modernization. It's often real estate, large equipment. Look, it's often just real estate. I mean, 504 loans are, I don't know. I don't know the percentage off the top of my head, but if I guessed, I would say over 80 or 90% of these are real estate, not equipment. So you can use them specifically for the purpose of purchasing large pieces of equipment. There's also all kinds of equipment financing and leasing that can help you with that. And then 504 loans are primarily the best option to be able to buy commercial real estate. That's where they're the best. So they actually help you come in and buy commercial real estate with as little as 10% down. And if you work with a broker, a super funder, a company like Credit Suite, for example, we can help you get the money you need for the down payment. So we use another funding program typically to get the 10% that you need down to be able to close on the loan. But keep in mind, they're going to want at least 10% down, typically depending on risk. And just keep in mind, whether you use us or somebody else, you can use another kind of funding to get the 10% you need to close on an SBA 504 loan. Here's why this is important. Right now, a lot of people are buying the space that they're renting, and they're able to do so for cheaper than they are actually paying for rent. So I saw an example like that the other day where the person's rent actually is higher, mortgage payment is higher owning the property than what they were paying with rent. But there was two other tenants in the property. And when you take into account, though, their rent they're paying, then it actually saved on a $10,000 mortgage payment they were paying, a rent payment, it saved them $6,000. They made an extra $6,000 in profit. So they took a property that was costing them $10,000 a month, and now they're actually making a $6,000 profit because of the tenants on that property. So that's a big swing, guy. That's a $16,000 a month swing from it costing them 10 grand to now gaining 6,000 from what they were getting. So it's a big swing, and this is a way that you can buy properties that you currently are renting. So something to think about. This program provides loans up to $50,000. So we talked about microloans, several of those questions coming in, and that being the case, these are loans up to 50 grand, which is why they call them microloans. Typically, microloans are due about 35 grand. Okay, but SBA actually will issue them up to 50 grand. Loans are intended to help small businesses and not specifically nonprofits. The average microloan is about 13 grand. The average small business startup needs 10 grand to start. So that's a good thing. 30% more than the average startup needs. Often intermediaries require some type of collateral and the personal guarantee of the business owner. So the key here is that you can get approved with challenge credit. They don't have specific credit scores that you need to have. They want you to dispute and remove any derogatory items. I've seen people get approved for these programs with low 620 credit scores. Not to say you can't get approved with high 500 credit scores, but I've seen people get approved for these for low 600 types credit scores. So high 500, low 600 scores you can get in. You can get in even as a newer startup business. You can get approved for up to 50 grand. And microloans are interesting because they're one of the only programs where money is lent by SBA. In a lot of cases, it's not lent by a big bank. You can get SBA microloans directly from SBA. So easier to qualify because you don't have to meet bank and SBA requirements. You just have to meet SBA requirements. So if you're not eligible, you don't meet the requirements that we talked about today, or you need more options, well, there's a lot of different other options that are out there depending on business age, your FICO score, your revenue that can actually work for you. And we can help you with those programs as well. To give you an idea, if these options didn't work for you, what is your strength? If you are starting your business, maybe you have good consumer credit. Maybe you have somebody else that can serve as a guarantor to help you. A mom, dad, family member, investor, friend. 75% of startups get money from family and friends. So use their credit to get credit lines instead of getting cash from them. It's easier to tap into the assets they have. And then they only lose out if you ever default. And then also really look at collateral. Stocks, bonds, 401ks, IRAs, purchase orders, equipment, commercial real estate, inventory, all of those kind of things can actually be used as collateral to get funding. And keep in mind, you can use yours or somebody else's assets, family member, friend, somebody that's a potential investor. You can use their stocks, bonds, 401ks, IRAs, equipment, inventory, purchase orders, account receivables, commercial vehicles, residential real estate, commercial real estate. All those assets can be used to get you funding, even as bad if you have bad credit, even as a startup. If you have bad credit, but you're in business 6 months or more, you really need, or if you're getting started, go through PayPal, go through Square, go through Stripe. They've got great funding programs where 6 months in business, they make it really easy to be able to get loans. That's why I really advise all startups to start funneling money through them. I love their programs. And then also keep in mind with, low 600 credit scores, you can get peer-to-peer lending. A lot of sources out there that can help you with that, including Lending Club. So some other alternative options. And don't forget, if you have good credit, you can get up to $150,000 in credit lines from a program called Credit Line Hybrid. Credit Line Hybrid works for startups, 0% rates, no doc, credit lines that you're able to get. And again, you can use your credit or that of a guarantor. So some options that are alternative options, that's like, 15 different alternative options if you can't qualify for SBA. So to recap, SBA has various eligibility requirements and a number of different types of loans. The SBA stepped up during COVID-19 with a couple different programs that can help. And then let's not forget about their SBA 504, the 7As, the CAPLines, all the other programs that are out there. And we can help you as well. Let us know. We never charge you a dime to get money. That doesn't mean the money's free. SBA charges fees and interest rates. The bank that issues them does the same. Any kind of lender makes their money in rates and fees, but we negotiate that to get you the best terms. We never charge you a dime for our help. And we work with over 1,000 funding sources to help direct you to the right source. We even develop a business blueprint to take you from the funding you can get right now to then graduate up to actual SBA loans. So if you'd like, give us a call, 877-600-2487. If you got value from this, hit that like button, share this, please. That's the only thing I ever ask you to do is like, share, and subscribe. If you're on YouTube, click the bell beside subscribe and click all, and you'll get notified when we go live. And give us a call for a free consultation. If you give us a call for a free consultation, then you actually will get your business credit reports for free. They're $249 from the credit bureaus direct. We give them to you for free. We go over them. We give you tips and tactics to build your business credit. We qualify you for funding on the call. And then we also do a fundability assessment to see how fundable your business is, to find the areas where lenders and credit issuers know things about you they don't know, and there's problems. We help you fix those problems to become more lendable. And we've got a great free guide at creditsuite.com/live that maps out the exact steps to build business credit, which is important because to qualify for a lot of SBA loans, you need to have established business credit. And if you got value from this, go to the top right of our page, creditsuite.com, and subscribe on our channels. You can see I'm engaging with people in real time on my chat, and I'm doing that because they're on our Facebook page, they're on our LinkedIn, they're on our YouTube, and they're on our Periscope. So if you're on Credit Suite's property, then you're able to communicate directly with us here, and I answer your questions in real time. So if you got value, do that, and then find our podcast and listen on the go, the Business Credit Financing Show. It's got 350,000 downloads, very popular, and we have special guests that come on there that teach you all kinds of cool things about being able to grow and run a business. So we have all kinds of experts on that podcast that I don't do here in live streams that actually get away from capital and just talk to you about the real nuts and bolts of running your business. So make sure you check that out as well. Okay. And Watch Out Media says, I'm wondering if 1099 self-employed contractors, electricians, plumbers, Uber drivers can still get SBA loans, not traditional brick and mortar. Typically, you really need to be not a 1099 self-employed contractor, but actually have your own entity set up, your own EIN set up to get SBA. But if you do have your own EIN and your own entity set up as a 1099, it is possible. That's why we always help a lot of real estate agents get this. A lot of real estate agents, we help them create their own business by setting up their entity, by actually coming in and getting an EIN number. And then once you set up an entity for your actual business and made yourself a business, then there's all kinds of funding options you can get, including business credit. And never forget, business credit, it's the easiest way to get capital. I've never found an easier way to get business credit or capital than business credit, because you don't need you don't need personal guarantees, you don't need credit checks, you don't need collateral, you don't need cash flow, it's no doc, and you're able to get really high limit credit cards, 10, 20, 30,000 at almost every store of Visa cards, MasterCards, etc. So it's one of the easiest ways to get funding. So never forget about that as well. So I'm going to wrap up. Thanks for tuning in. Now you know over 10 different ways to get SBA loans. We'll talk about like 15 other ways you can get other kinds of money. And don't forget, if we can help you along the way and get your free business credit funding consultation, give us a call, 877-600-2487. That's 877-600-2487. Thanks for tuning in. Thanks for liking and subscribing. Thank you for sharing. And thanks everybody for engaging and with your comments and questions today. Thanks everybody. Have a great day.